Welcome back to another Ariaswave video. So it's been a long time since I've posted, but I thought I'd go back to, posting about gold. Why not? At least in this video. There's a lot to cover, but let's start with gold. What's happening with gold? So you've got to go back to the beginning of time to understand what is the process with gold. And I reckon, to be honest with you, it's actually not that difficult once you get the pattern, understand what it's about. So the first five wave moves, you know, up. This could be an A wave or a wave one, right? So don't pay too much attention to the labelings. It doesn't really matter. It could be a one or A, right? At this point in time, it does not make one difference. And I'll tell you why. Because the pattern is a long term pattern, right? So after wave one, you had a wave A from 1980 down to 99, right? Slash 2000. And that was a wave A. Then you had a wave B, right? Wave B is what you've been seeing going on in the markets recently, right? That's been the whole up to the moon type euphoria feeling, mania, bubble type feeling, right? And I believe what we're going to see is soon to be the opposite effect, right? You've seen the max, now you're going to see the other side of the coin, right? So, what is the actual pattern of the B wave? So, as you can see here, I've marked it out, and this is a very specifically an Ariaswave phenomenon. It's not something that Elliottians typically use to understand charts. Now, Ariaswave is not Elliott Wave, it's a different methodology altogether. Eventually, I will publish a book and make it more mainstream, but for now, I just like to post on it. So keep doing that. I will. Took a little break. Did a lot more. Uh, how can I say? I learned more about fundamentals and classical technical analysis trading, which was really taking up a lot of my time. So had no time to post, but now I'm back, all good, and I'm going to be incorporating that into the analysis. So here we have the first part of the B wave, right? Five wave move up to 2008. We had an A, expanded B, small c, D, and E, right? Now this is very common for E wave to end at the end of the A wave in a expanded zigzag, right? I've seen this happen many times. Uh, so then we're looking for a five wave move up. It started off like this: one, two, three, four, and five. Five up was extended five wave move, right? It was a cup and handle pattern, five wave move up, right? It hit the target, it overshot, and then it reversed. So I do believe we've hit the top of gold. We're looking for a C wave down now, right? So yes, that was a B wave up, right? I'll label that stuff later. It's not important. So if we just go to the top right now, I just want to talk about this, right? I will just zoom out a little bit toward the end of this video, but right here, I can see that we have reached a peak. What the? Of course. I can only show you one tab. Okay, never mind. Uh, I'm assuming I can switch between tabs on this, so I'm going to switch to this tab, right? It's just a bit weird. I haven't posted in a while, and I'm using the app, right? The TradingView app. Anyway, just in case, let's just zoom in to the hourly chart at the highs, right? So why do I believe we hit a peak? Well, I could show you that straight away, and I probably will. Well, okay. First of all, we have this. Forget about the blue light, the blue channel, right? The one that I used primarily was the B wave correction levels, right? We had an A, B, C, D, E. These levels were important to me. So I used it as a not only the distance of wave A to wave C, but also the channel. So we exceeded the length of wave A, and we also exceeded the channel. So I think that it's very important at the top of the channel that you can understand where I'm coming from in terms of this move, right? So we broke above that orange channel, and yeah, so we did actually see a move up. So I also drew in the 2-4 trend line there, according to the Ariaswave count. And it appears as though we did create a top. Now, I just want to show you this before I continue, that if you go to the daily chart, if you love candlestick patterns, this is an evening star reversal pattern. In my opinion, I think that's, you could call it that. It's a very bearish reversal signal, right? So continuing on, I want to go and drill down to the hourly chart, right? So we had that reversal, but this was not a 5-wave move. This is the key component to my analysis at this point, right? If it changes, I'll let you know. But for now, I'm shorting this, right? And I'll explain to you where my stop level is, right? So I believe that this here was wave one. Everything else is corrective up until this point, right? So basically, you had a wave A, you had a B, C, D, E, right? E ended at this end of wave one, right? So I'll get rid of all this now, just because I showed you already. So I drew this little dotted line, end of wave one. This is typically where you get that area of resistance, right? Now, if you look at that area in particular, you'll see that back here, it also acted as resistance for some reason, probably because it's close to the psychological level 5,000. But these things are not always perfect. This was definitely an area of resistance. It popped up and then it came back down, retested it, and then broke through. To me, this is looking like a reversal, right? But it's not actually a 5-wave move. There's overlap in the waves. So I looked in closely and I could see an A, B, C, D, E, right? So I believe to this moment that this is the end of that correction here, right? So what happened? You had a 1 A, B, C, D, E. So this is a small D in there. I've marked it with a little square or rectangle. And then we've gone up, basically didn't make a new high, and then started to sort of chop around. So this is important because it's easy to say, oh, look, it'll continue higher like the last time it did this, right? Which is like, whoops, I just had a bit of a reset there. Hopefully it's still recording. Like back here, right? Oh, look, you had to move down and then continue up like a cup and handle pattern. But the truth is, this is different. All right, this has got a much larger reversal than the previous move down, right? So, sorry, I was not even looking at the right spot. I meant to say this part here, right? Here you had an A, B, C, D, E. This one was pretty difficult for me to identify at the time. That's why I didn't even bother posting not a thing. I thought, nah, I'm staying away from this. And I did post an idea. I probably, actually, you know what? I think I did post an idea. Short now or forever hold your peace. It was not the right time, clearly. This is the right time. So hopefully we see some follow through. And there's a reason for my madness. It didn't actually touch the channel. I should have not have jumped to conclusion as much. But then I started to see this and I thought, okay, just wait for some kind of sign. Here we have the sign. We came back down. We retested the break of the channel. We sprung back up, but the spring back up looks completely corrective. As I've mentioned to you, this move down was not a 5-wave move. There was a chance that I could have looked at it as an A, B, C structure, but I really don't think that's the case at this point. So I think that, yes, we will see a reversal from this level. I think this is a very important level to go short, and I've gone short with a stop at 5,092 or 5,093, whatever, right? And I believe that we're going to see a 1 A, B, C, A, B, C, D, E, and this is the next move is incoming. It's just going to tank maybe overnight with the non-farm payrolls, right? So that's how I'm approaching this one. I do believe that this is a 1-2 for the move down. I do believe this is the beginning of wave C, and wave Cs can be pretty brutal, especially with expanded corrections. Now, that doesn't necessarily mean that that's true, what I just said, right? Especially if you go back down here to this previous level of, uh, probably should go to the 4-hour chart for this one. Back here when we were at the 2011 high, actually, I'll go to the daily chart, right? See here, A, B, C. Look how small C was, right? It wasn't actually that big. And then you had a D and an E. So C wave can be brutal, but it can also be small. And I've noticed this across many charts recently. Sometimes C waves can be small. I don't know why. This is a new Ariaswave guideline, but I've seen it so many times now that it's kind of hard to ignore. So the C wave could be just a bit of a distraction at this point. So we have to keep an eye out. Whenever we see a good 5-wave move down, I suggest we be cautious because the bounce could seem like a correction, but then the following move will give you the answer. So I would probably not be trading a bounce so easily. There needs to be a little bit more evidence. But anyway, I'm not going to get into that so much straight away, as to basically just continue the analysis at this point. And yeah, so I could see that we did, complete wave E. We had a break of the previous wave 4. We did see a 1, A, B, C, D, E. I believe this is the important area. If we make a new high here above this pivot high here, obviously that's not good. Um, but at this point in time, I see no evidence to suggest that that's going to happen. So I'll leave you there and digest this, and I'll probably update you very soon, and I'll catch you in the next one.